Hi, my name is Lindsay Shaw and I'm the Corporate Finance Director here at Brown Butler. And today I'm going to be taking you through raising finance in tough economic times. There are many reasons that a business may need to raise finance, such as growth, investment in assets, or to improve cash flow when money is tight. Whatever the reason for it, a business's ability to raise finance depends on both macro and microeconomic factors. In times of economic growth, raising finance is far easier and cheaper than when there is economic uncertainty, as we are currently seeing in the market. Although it may be more of a challenge now, it is certainly not impossible for businesses to raise finance that they need. Having a stable business, a solid business plan, and being prepared are a few things that will increase your chances of raising the funds. This video will focus on some ways you can raise finance for your business during economic uncertainty. Your starting point needs to be the business's financial health. Before you seek external financing, thoroughly evaluate your existing cash flow to identify areas where you can reduce or eliminate spending. This will not only help to conserve cash, but will also help make your business more attractive to potential investors or funders. At the same time, you should review your business plan. This includes a review of customer and supplier financing, because you can create an immediate cash increase by negotiating extended payment terms with suppliers or shortening customer payment terms. Make sure your business plan is realistic and not overly optimistic. Include projections within the business plan that are robust and well thought out and that will stand up to scrutiny. Once your house is in order, you can explore multiple funding sources for the best chances of success. I'm now going to go through some different options that may be suitable for your business when raising funds. Firstly, consider sources of internally generated funds. If you need to manage an unexpected circumstance, you may be able to use funds that have been generated through the activities of the business. However, you also need to ensure you have enough cash to continue daily operations. If it is not possible, there are plenty of external funding opportunities that may be available. Bank loans are one of the more traditional financing options that businesses can use. They're likely to be cheaper than other sources of finance, but banks may be less willing to approve loans in tough economic times, so they may be harder to secure as banks tighten their credit requirements. An alternative to traditional bank loans is to obtain funding from a challenger bank. This is a type of bank that has been set up to compete with the more traditional banks, usually in a specific area. Some have been set up with the express goal of helping SMEs with funding, for example. These banks might have more accepting credit policies, making it easier to borrow from them. You might also consider seeking external investment. This can help you raise the funds that you need, but also help you to pursue growth in the future. There are a few different types of investment that are most commonly used to help a business raise capital. The first is asset-based lending, or ABL. This is a form of funding that uses the assets of a company as security for lending against, for example, property, debtors, machinery, or stock. For this type of funding, the business needs to have quality assets that have a value. Some ABL providers will also offer a proportion of funding over and above the value of the asset for a period. The next is equity funding, typically in the form of venture capital. This is usually for businesses that are expecting high levels of growth. Investors, known as venture capitalists, will give a business money in exchange for a percent of the shares. The benefit of this type of funding is that there are usually no immediate repayments, which allows the business to grow revenue streams to generate cash. Usually, VC investors take most of their return upon their exit from the partnership. Another similar type of investment might come from angel investors, who typically invest on more of an individual basis than a formal venture capital fund. A type of angel investment that has grown in popularity over the past decade is crowdfunding. This is where a business pitches virtually to many people who then decide if they want to make the investment. Typically, many people contribute smaller amounts to make up the whole investment. There are online platforms on the market that offer this type of investment. Finally, your business may be eligible for government grants, loans, or tax benefits. If you are operating in high growth sector where the government wants to support innovation, then there are often government grants available to incentivize growth. These do tend to be very project specific and can be quite competitive. Equally, in times of economic hardship, the government may also offer support in form of low interest rate loans or grants. However you choose to seek investment, my advice is to show a strong value proposition. Clearly communicate why your business is valuable and how it addresses a specific need, especially in tough economic environments. Investors and funders are more likely to fund a business that provides a solution or has innovations. Networking is also critical to seeing your business through economic turbulence. Building lasting relationships will help you weather future storms and put you in a better position to raise capital in the future. Brown Butler are here to offer advice and guidance on business financing. If you need support raising finance for your business or want to put a plan in place for the future, please feel free to get in touch with us and see how we can help. Thank you.